Gold moved $459 in a single trading session this week. $459, from $4,098 to $4,557. In one day. And right now, every major precious metals futures market is closed. OG John AG here. Drop OG John AG in the comments if you are here paying attention and actually learning. The market has no mechanism to price the Iran situation until Asian markets open Sunday evening. That is the setup. Let's get straight into it. Before we go further, if this kind of data-first analysis is what you have been looking for, hit the like button right now. Subscribe to OG John AG 1.0 and share this with one person who needs to see these numbers. Now, back to the data. Lead story today. The Iran contradiction. Trump's administration stated that talks with Iran were, direct quote, very good and productive. Iran's government categorically denied that direct talks occurred at all. One of those statements is false. Both cannot be true simultaneously. The market has zero mechanism to resolve that discrepancy before Sunday night's Asian Open. And this is not a minor diplomatic nuance. If Iran's version is accurate, if talks are not happening, then the 10-day pause on strikes against Iranian energy infrastructure is a unilateral U.S. decision. No Iranian reciprocity, no agreed framework. A 10-day pause with no counterparty agreement expires on April 6th. Think about what that sequence actually means. The April 6th deadline is not a ceasefire, it is a countdown. The ones paying attention already know what to watch between now and that date. Before I show you the full data picture, consider this. Earlier this week, gold printed $4,098. By end of session, it was at $4,557. That is a $459 range in a single session. On a gap open driven by a single geopolitical development, that is the mechanism that is sitting live right now, with futures markets dark and Iran's position directly contradicting Washington's. Let's build the complete picture. Now let's build the full picture because the Iran contradiction does not exist in a vacuum. Gold Western spot closed Friday at $4,492.99, sitting just below the 4,500 resistance level. Silver closed at $69.79. The U.S. dollar index, DXY, held at 100.19. The U.S. 10-year Treasury yield locked at 4.41%. Markets are now pricing a near 50% probability of a Federal Reserve rate hike by December of 2026, a complete reversal from the 2 rate cuts that were priced at the start of this year. COMEX registered silver, the metal actually available for physical delivery, sits at approximately 103 million ounces, down 38% from 167 million ounces in October of 2025. COMEX silver open interest stands near 127 million ounces equivalent. Shanghai silver is clearing at a $3 to $5 premium above COMEX paper. Physical buyers in Asia paying above the Western quoted price to secure real metal. Gold ETFs have seen $7.9 billion in outflows since the Iran conflict began. The rate of institutional de-risking is not slowing, it is compounding. The data is doing the talking. The ones who flagged the gap risk heading into this weekend, they are not saying much to the skeptics right now. And here is what makes that picture even harder to ignore. JP Morgan's year-end gold target sits at $6,300. Deutsche Bank sits at $6,000. UBS sits at $6,200. Not one of those institutional targets has moved since the Iran conflict began. At the same time, those same institutions have largely moved to the sidelines on active positioning, with ETF outflows confirming the capital is waiting rather than deploying. That is not a contradiction. That is the setup. Institutional conviction in the long-term thesis is intact. The short-term binary is what is keeping capital on the sidelines. And before anyone takes those year-end targets as a green light to size in ahead of Monday's open, setups of this kind can take weeks to resolve. The structural picture and the timing of entry are completely separate questions. Anyone who claims to know what gold does Monday morning is selling something. Here is the number most people are not talking about. April 6th, 8 days. That is how long remains on the unilateral U.S. pause on strikes against Iranian energy infrastructure, with no confirmed Iranian agreement. Here is the cost math. Iran processes approximately 3.6 million barrels of oil per day. The Strait of Hormuz carries approximately 21 million barrels per day, roughly 20% of global oil supply. If Iranian retaliation targets Hormuz shipping or Gulf energy infrastructure before April 6th, Oil reprices above $115 immediately. Now the Iran binary, because this is no longer a backdrop to the metals market. It is the primary variable. Trump described the conversations as very good and productive on Friday. Iran's foreign ministry denied direct talks occurred the same day. DXY is holding above 100, precisely because energy inflation fears are keeping the dollar geopolitically bid. Markets are currently pricing a partial resolution before April 6th. That assumption is embedded in the $4,493 gold price. Look at Iran's direct public denial and tell me what probability you assign to a clean resolution in 8 days. When markets begin pricing the reality of what a unilateral pause without reciprocity actually means, gold reprices higher on safe haven flows. Silver reprices on industrial inflation pass-through. The dollar reprices depending on whether the Fed is forced to respond to an oil shock. That is the historical pattern. Every time a geopolitical binary has been structurally mispriced by paper markets, it has not been different yet. Gold Western Spot at $4,492.99. Silver Western Spot at $69.79. Shanghai Silver Clearing at $72 to $75, a $4 to $5 physical premium. 4,500 is the immediate resistance level for gold. That level was rejected into Friday's close. If the Iran situation produces a credible ceasefire signal before Sunday's Asian Open, gold gaps to 4,600 to 4,700. Silver follows to 73 to 75. If any military development occurs over the weekend, escalation, Hormuz threat, resumed strikes, gold gaps to 4,200 to 4,300. Silver breaks $65 on opening panic. That is the only short-term read that matters right now. As for trading this gap, I cannot see a clean picture. I cannot tell you what gold does at Sunday 6 p.m. EST. Nobody can. If you think you know, good for you. This is a market where one diplomatic statement moved the price $459 in a single session. Sidelines is not weakness in this environment. It is the only edge there is. I have called this market both directions. I will call it again when I see it clearly. Right now, I do not see it clearly. The tape decides, not me. Here is the honest truth. Both sides of this gap have a real and data-backed case, and the one you dismiss without examining is the one that will cost you. So let's run both cleanly. The bear case is real. Iran's categorical denial of talks means the April 6th deadline carries no Iranian commitment. Escalation risk is structurally higher than paper prices reflect. DXY above 100 mechanically suppresses USD-denominated gold and silver through real yield mathematics as long as the 10-year holds at 4.41%. Gold ETF outflows of $7.9 billion since the conflict began confirm institutional capital is de-risking, not accumulating, that selling pressure does not reverse overnight. The bull case is equally real. JP Morgan, Deutsche Bank, and UBS year-end gold targets of $6,300, $6,000, and $6,200 respectively remain unchanged. Institutional conviction in the structural thesis has not moved. COMEX registered silver at 103 million ounces against 127 million ounces of open interest creates a physical delivery gap that paper prices are not yet reflecting. Gold's recovery from 4,098 to 4,493 in a single week demonstrates the speed and scale of repositioning when the geopolitical signal shifts. Size correctly. Know what you are in before you are in it. The physical market is already pricing the stress that paper markets are still discounting. That argument does not last forever. Everything shown today points to one conclusion. The gap is live. The Iran binary is unresolved. The capital is positioned and waiting. The only question is which direction Monday morning confirms. Don't take my word for it. Verify every number given today. Check the data yourself. CME Group warehouse and delivery data at cmegroup.com. U.S. Treasury yield and Federal Reserve policy data at federalreserve.gov. Dollar index and market pricing at wsj.com. Market data. Logic over hype. Always. If this analysis added value, like this video right now. Subscribe to OG John AG 1.0 so you never miss a data drop. Share this with one person who needs to see these numbers before Sunday night. The ones running the OG John AG 1.0 playbook do not wait for the mainstream to catch up. They already know. OG John AG 1.0. Out.